The average interest rate for 30-year mortgages rose to 6.72% from 6.6%. Credit costs in 15-year fixed-rate mortgages rose to 5.92% from 5.84% last week. Washington, the average 30-year mortgage interest rate in the U.S. rose this week to the highest level since the end of November, reflecting a recent increase in bond yields that lenders use as a guide for pricing home loans. The rate rose to 6.72% from 6.6% last week, mortgage buyer Freddie Mac said Thursday. The rate is now higher than a year ago, when it averaged 6.67%. Credit costs for 15-year fixed-rate mortgages, popular among homeowners seeking to refinance their home loan to a lower interest rate, also rose this week. The average rate rose to 5.92% from 5.84% last week. A year ago, it averaged 5.95%. The average 30-year mortgage rate is now the highest since November 27th, when it was 6.81%. High mortgage rates and rising home prices have put homeownership out of reach for many homebuyers. While sales of previously occupied homes in the U.S. rose in November for the second month in a row, the housing market remains in decline and on track for the worst year since 1995. Bond yields jumped on Wednesday after the Federal Reserve signaled that it will likely make fewer interest rate cuts next year than it predicted just a few months ago. While the central bank does not set mortgage rates, its actions and the path of inflation affect the movements in the 10-year Treasury yield. The yield, which was below 3.7% as recently as September, was at 4.56% in midday trading on Thursday. Thanks for watching. Please visit our site for additional videos and articles, www